Welcome back to my channel. I am glad that you are here. If you're new, my name is Jermaine and I am the owner, the founder of Visionary Accounting Group. And this is my YouTube channel. This is my little corner of the internet. Today we are going to talk about how to stand out to grant reviewers. Now, if you're watching this video, you either work at a nonprofit or you run the nonprofit. And so you are going to want to stick around to see what I have to say. Now here's an uncomfortable truth. Grant reviewers look at hundreds, maybe even thousands of applications, right? The thing about that is because they are looking at so many, they often never really read the full narrative, right? I know you probably heard me say on here, make sure that you are including a narrative with your application, and that is still important, but a lot of times the applications are not being reviewed fully, right? Especially at that first look. A lot of times it's usually just skimming, seeing if this organization sticks out. Do I want to move them up to the next round? And then I'm going to dive in deeper. We have to make sure that the application itself is eye-catching to someone who is skimming. That is the first thing to kind of put in your mind, right? I would say typically around the first 90 seconds, maybe I'll give you first 2 minutes. They've already decided whether your application is going to be one that they will review in depth, right? And if not, it's getting, put off to the side. And so what I want to talk about in this video is how you can structure your finances so that when your file is open, they immediately see, oh, this is an organization that is worth funding. Let's get into the first point for today. Now, it's been a while since I've talked about formatting, chart of accounts, classes, things like that, right, in QuickBooks. However, whenever your financials are being reviewed, they're built off of how you have structured your chart of accounts in your accounting system, right? If that is messy and unorganized, then as you can imagine, when they open and they look at that statement of activity, that's going to be the first thing that jumps out at them, right? And so what I often see is the statement of activity is kind of built around functional expenses when that is incorrect, because you have a statement of functional expenses. Let that live there. Your statement of activity in a nutshell is how much money did we bring in and where did it all go? How much did we spend and on what? And we want that to be very clear and concise, and we want to just stick to basic, main, natural categories. We're not getting into the nitty gritty just yet. We want it to just be very clear. Oh, they brought in 10 million. Oh, they spent 8.5 and this is what they spent it on, right? Very clean, cut and dry. So that's the first thing. Just making sure that the structure of your chart of accounts is very clear and clean and that it translates well when you look at the financials, more specifically your statement of activity. Anytime your application is being looked at and someone is looking at your balance sheet, they typically want to be very clear between what's restricted and what's not, because it gives a clear picture as to what do you have to spend at your leisure versus what has a very clear stipulation as to how you spend it. It also signals to the funder, does this organization have a good internal process that they follow that categorizes these things, that separates what's restricted versus what's not, right? Because if that's not even on the balance sheet, or if it's all jumbled together and you have to create some whole explanation as to what is restricted versus what's not, the immediate light bulb that goes off is like, oh, okay, they probably don't have a process internally. There's some structural issues here as it relates to their accounting, that they're not able to do this consistently and then show it to us, right? What you want to make sure you are doing when you are closing your books is determining at the end of that month what is restricted versus what is not, and it should be very clearly indicated on your balance sheet. And I'll be honest, for those of you that use QuickBooks Online, you know that it is technically not set up for fund tracking, and so you have to make sure that you set up the accounting system to support you in the way that you need. I'm sure I have a video on here that tells you how to use classes for functional expenses, and then also how to use locations for your fund tracking. So if you are not doing that, you will want to take a look at that video. Now, the next thing that funders, grantors are going to be looking at that need to be very clear is your budget to actuals. This is really also where I like to make sure that your narrative touches on. Right now, your narrative is not going to only speak on your budget to actuals. It really should be speaking on the package as a whole and how you want to present the organization, right? However, your budget to actuals is very key because it also signals to them like how you are doing. And one of the things that I find here is that it can highlight some gaps, right? So you said that you were going to bring in, 10 million this year, but you are at 5, right? And you are, more than halfway through the year. So that might signal a question as to, so what's happening here, right? They'd have to ask that question. What we like to do is be proactive. And so we're going to answer that question in our narrative. You see how it kind of goes back? So the important thing is like when you're pulling your financials and you're preparing that package is that you should be looking for things that are going to stand out. And those are the things that you should be including in your narrative so that if the question pops up, they don't even have to come back to you and ask why, because the answer is going to be in that narrative. If you are over or under in certain expenses in a significant way, or even that expense category might be significant, let's say it's salaries, you might want to indicate, hey, we had a very key person leave, we had to replace them. And this person was significant to our operations because of X, right? And I mean, that's just an example. However, these are going to be questions that come up. And so you want to make sure that you're not just putting together the package and then just shipping it off. You want to review it and you want to see what kind of jumps out at you, because if it jumps out at you, 9 times out of 10, it's going to jump out at them. And so you need to be answering that question in your narrative. And the last thing I want to go over is overhead. When you hear overhead, some people are thinking like indirect cost raise. Some people might be thinking cost allocation. And what I'll say is all of the above. I'd have to say that that's probably this area is probably one of the most misunderstood things as it relates to like the nonprofit world, or nonprofit accounting, I should say. It's honestly key because funders like to see, one, how much you have in overhead expenses, how are you covering, right, those overhead expenses, and where those overhead expenses are allocated. And when I say where they allocated, like what funder or what grant is paying for them, but then also what function do they serve, right? So how much of your overhead expenses are administrative versus programmatic or for fundraising, right? And so you want to make sure that that is crystal clear, and you want to make sure, because what I find is that we all know it's an issue, but I'll still look at a statement of functional expenses and I'm like, wow, the admin expenses look very high, and they'll be like, oh no, that's not right. And then they want to put, they're looking through and it's like, oh, well, actually this should go here and that should go there. And this is why we don't wait until the end of the year to pull the statement of functional expenses, and we send one every month. Why? Because one, sometimes things change within the organization and you have to adjust your cost allocation, but also it's different when you think things are going to one place and it looks a certain way versus you get this financial statement and you're like, whoa, I did not expect to see X amount of dollars in this administrative column. Maybe something needs to be adjusted here, right? And so these are the kinds of questions that will come up also if a funder or a grantor is looking at your application. And so you want to be proactive, right? Now, if you have that kind of question, you might want to go back to the drawing board and make sure that the accounting piece is correct and things are being allocated appropriately. Now, if they are being allocated appropriately and overhead is slightly high, or it's teetering where, their administrative expenses are high, that is something that you should explain, because also it takes staff, right, and certain expenses to run an organization. And unfortunately, it sucks that we have to continue to explain this to funders, but sometimes you just have to do it. And so if your administrative expenses are correct, then you should explain why they're on the higher side, right? And making sure that you're indicating why that is important to the organization and why you need to have those overhead expenses, right? And why we probably need your money. I know I said I was done and that was the last point, but I lied. This is the last point, your audit quality. So 9 times out of 10, depending on the size of your organization, you are getting audited, and you are getting audited annually. Typically, if you are getting audited, your audit report is requested. In fact, there are some times that I see organizations that are not getting audited, but the audit report is asked for in the grant application, and sometimes they have to explain why they're not getting an audit. And it might just be, right, like they haven't hit the threshold, they're not required yet, which is fine, but you do have some organizations who haven't hit the threshold, but they just opt to be audited so that it makes them just look that much better to a funder. It's that piece right there. Funders like to see that there has been an independent assessment of your organization's finances, financial controls, right? They want to know like this organization has been stamped that they properly steward their finances, right? And so when they get the audit report, it needs to be a good one, because the quality of your audit report, what the opinion was, can literally be the determining factor as to whether you get the funding or not. So when you pull back and you start to think about your day-to-day bookkeeping and accounting and closing your books and doing reviews, that has to be airtight, because it's those very things that make up what's happening in the audit. And so you want those things to be right so that you have a clean audit, you have a really good opinion, and then you are able to thus then show that when you are applying for different types of grants. Now I know that this is probably like, this is what we need to do to get a grant ready or to stand out. And it's like, yes, and a lot of times these are just different things that we've talked about, but in a new way. And fortunately for you, this is literally the crux of it, right? These foundational things just grow, right? They don't really change, but they do grow. And so if you don't have it down pat now, once things grow and get more complex, so do the problems. They just grow and get more complex. You know that saying, more money, more problems? Exactly. And so you want to make sure that you are not waiting till we grow, not waiting till we hit set threshold. Think about these things now, because if you're planning to apply for grants, or if you already are, you have to be ready, and you want to stay ready. You want to stay ready. You don't want to have to get ready. So if this video was helpful, please like. If some of you are watching but you are not subscribed, please subscribe and become a friend. I'm going to get back to publishing content every week, and this content best serves nonprofit leaders who truly want to build organizations that last, right? And so if you know that that is you, subscribe, stick around, and if you have a video that you'd like to see, please drop it in the comments, and I'll see you guys in the next one. Bye.